Well, as the crude oil prices have been rising in recent days, we're seeing Indian airline stocks coming in under pressure. In fact, IndiGo, the stock had recently hit an over a one-year high just very recently, but this stock has now been trading in the red for a sixth consecutive session. In the last 6 consecutive days itself, the stock, which has been trading in the red, has lost close to around 10% from its recent peak. In fact, IndiGo, if we look at that, some of the brokerages are also going ahead and putting in a downgrade or a neutral rating since the stock has gained considerably. And in fact, now it is Citi which has gone ahead and downgraded the stock to sell with a target price of 1400 per share. In fact, Citi believes that the market share for IndiGo has peaked, and there are many imponderables regarding sustainability of the Q2 drivers. Citi, however, still continues to value IndiGo at 2.2x FY22 enterprise value to sales multiple. In fact, if we look at the recent data coming in from DGCA, IndiGo has surely gained substantial market share from the pre-COVID levels. In Jan 2020, IndiGo's market share stood somewhere around 48%, and in October, IndiGo has gained market share to nearly around 55.5%. However, if we look at the data of August, IndiGo market share stood at close to around 59.4% in the month of August 2020, which has come down to 55.5%. And herein, I guess Citi is trying to mention that yes, the current market share for IndiGo has peaked. In fact, if we look at the Brent crude prices, also from the recent lows of $39 per barrel, Brent crude prices have gained to nearly around close to around $49 per barrel. And to know that oil prices form a substantial part of the overall operating cost for airline stocks, and of course the recent rise in the crude oil prices have also dented the overall sentiment on the airline stocks. We at ET Now also did catch up with the management of IndiGo very recently, and they did mention that all projections show that demand is going to be high, and they're optimistic fairly in terms of the domestic traffic, and they would continue to add traffic at the earliest. They expect to reach close to around 80% on domestic capacity by year end and 100% by the next year. They also mentioned that international capacity is only around 20%, and they do hope to be back in terms of the international capacity by September 2021. Management also mentioned, stated to ED Now, that IndiGo is surely out of crisis, and the crisis scenario is definitely disappearing, although slowly. So yes, although there are a good amount of positives that have happened in the very recent few weeks in terms of the economic rebound being faster than anticipated and a better air traffic, the rise in crude oil prices, as well as the recent rise in COVID cases both in India as well as globally, these two reasons are also some of the factors which are denting the sentiment on airline stocks. As of now, a downgrade coming in from Citi on IndiGo with a target price of rupees 1400 per share.